In this video, we are going to talk about Visa stock analysis. So before starting this video, please like this video, and subscribe to our channel for the future updates. Visa is the ultimate compounder, according to this Visa stock review, NYSE, V. Visa's sales, earnings, and cash flows are all increasing, resulting in ever-increasing dividends, as the demand for Visa is clearly increasing due to global economic growth. I have two different bank accounts, one with Visa and the other with MasterCard. I believe you'll find a similar distribution if you open your wallet. If this trend continues, Visa's stock output is likely to follow suit. However, if the growth doesn't hold up, things could get ugly, because the delta of the delta, not just the delta, determines the value of growth stocks. To put it another way, it's the shift in growth that affects stock returns, not the growth itself. If you want to learn how to evaluate growth stocks and what the most important aspect is when analyzing the risk and reward of investing in growth stocks, read on. Let's start. Visa stock analysis and valuation. It does, however, come with a high valuation and a low dividend. The entire point of Visa stock is that it has to keep growing and compounding. When that happens, the stock will take a huge hit as well. Visa stockholders are fortunate in that the company continues to give. Since they can reinvest capital at rates above 20%, they have a low dividend payout ratio of about 20%. When it comes to investing, the company has everything you might want: rising profits, a high margin, and a high return on invested capital, as well as steadily increasing dividends to shareholders. Apart from the dividend, the amount of outstanding Visa shares has decreased from 3 billion to 2.2 billion in the last decade. That's almost a third less than the amount of Visa shares outstanding in 2009. Visa stock investment analysis. It all comes down to traffic and growth when it comes to investing. If the economy comes to a halt, Visa's traffic and profitability will stagnate for a while, and the stock will follow suit. Visa is undoubtedly a compounding market, but at a PE ratio of around 30, I believe it is reasonably priced. If earnings continue to compound at a rate of 15% each year, the PE ratio on the current price will be just 15 in 5 years and 7.5 in 10. If Visa's business continues to expand at 15%, the stock will follow, and the PE ratio will remain close to 30, with investors receiving returns of around 15%. If Visa's growth slows to 10% per year, earnings per share will be $8.56 in 5 years and $13.79 in 10 years. Furthermore, with a PE ratio of 30, the market is unlikely to value a business rising at 10% the same way it does now. If the value drops to 20, the stock price will be $171 in 5 years, and investors will receive no returns. When it comes to investments like Visa, this is the greatest risk. It is the delta of the delta, or change in the growth rate, that has a major impact on future returns, not so much the growth, or the so-called delta. So, the only question is whether Visa will continue to expand at such a rapid pace. Since I don't have a crystal ball and don't know what Visa's future growth would be, I simply avoid such high-risk investments where a company must grow at 15% over 10 years to meet my desired business return of 15% per year. For me, it's too dangerous. Many companies have shown similar growth and compounding power in the past, but the growth and stock appreciation eventually slowed. Visa stock technical analysis. From a cup with handle base pattern, the payments giant rose past a buy point of 211.69 on February 23. The stock is currently in the buy range. According to MarketSmith chart review, the relative strength line shifted sharply lower as the stock dropped 6% on March 19, piercing through its 50-day line. It's the blue line in the diagram. Since then, the stocks have recovered the benchmark. Visa stock fell 37% during the coronavirus crisis, which is much less than many other top stocks did during the bear market. The Ibd Composite Rating for the stock is 44 out of a possible 99. In a single score, the ranking blends main fundamental and technical metrics. A 29 rupees rating is lower than the 80 or higher that top growth stock investors want. The de-accumulation distribution rating represents institutional investors' modest selling in the previous 13 weeks. The stock of Visa is heavily traded, with 9.7 million shares changing hands on a daily basis. Mutual funds own half of Visa stock. 5,515 funds held Visa stock as of December 2020, down from 5,477 in September. Visa earnings and fundamentals. The world's largest electronic payment networks are operated by Visa and MasterCard, along with China's UnionPay. In contrast to American Express and Discover Financial Services, DFS, which do both MasterCard and Visa process card purchases but do not issue credit cards. As Americans default on their payments during the virus outbreak, credit card issuers can face headwinds from unemployment. Visa and MasterCard are both less vulnerable to interest rate risk. Visa does not profit from or bear liability associated with the interest or fees charged by cardholders. Client services, data processing, cross-border transactions, and value-added services, such as license fees, are how Visa makes money. It has a network that spans over 200 countries and regions. After Visa and MasterCard increased swipe fees for certain forms of credit card transactions in April, earnings could improve. Swipe fees, also known as interchange fees, are fees charged by retailers to card-issuing banks and credit card providers in exchange for handling credit and debit card transactions. Swipe fees are normally about 2% of the purchase price. However, Visa is facing billion-pound payouts after the UK's highest court ruled in June that both Visa and MasterCard hampered competition by charging retailers fees. Visa stock has an Eps rating of 72 out of 99 and a best possible SMR rating of A based on main earnings and sales metrics. The SMR rating tests revenue growth, profit margins, and return on equity, while the Eps rating represents a company's health based on fundamental earnings. Visa posted fiscal first quarter earnings of $1.42 per share on revenue of $5.69 billion on January 28, exceeding analyst expectations. Revenue from services increased by 5% to $2.68 billion, while revenue from data processing increased by 6% to $3.03 billion. However, international transaction revenue fell by 28% to $1.45 billion. On a constant dollar basis, payments volume increased 5%, while total cross-border volume dropped 22%. The total number of transactions processed increased by 4% to 39.2 billion. According to the Ibd stock checkup method, Visa has averaged 11% Eps growth and 6% sales growth over the last 3 years. Visa outlook. Visa expects $17 trillion in consumer spending and $15 trillion to $20 trillion in business spending to shift to cards and digital formats, according to its most recent annual report. Most of the spending is also done in cash and checks at the moment. Visa payments volume and processed transactions are improving faster than cross-border volumes as the pandemic continues. Transactions between shoppers and merchants from different countries are referred to as cross-border transactions. Meanwhile, a promising development in the midst of the pandemic is the global transition to e-commerce sales. This benefits us because Visa's share of digital commerce, where cash isn't an option, is roughly 3 times greater than the physical point of sale, Visa explained. Payment processing is a lucrative industry. With a 66% pre-tax profit margin, Visa stock outperforms other competitors. Visa's 36% return on equity is significantly higher than the minimum 17% or higher needed by investors. Digital payments are a development opportunity, fueled by the rise of 5G networks. During the pandemic, Visa's real-time drive-in payments technology has seen significant progress. Visa announced a partnership with Facebook, FB, in Brazil for WhatsApp payments in June. In the largest country in South America, the messaging app has 120 million users. After briefly suspending the newly launched service and ordering Visa and MasterCard to halt such payments, Brazil's central bank approved payments through WhatsApp chat in July. For its previous decision, the central bank cited competitive and data privacy concerns. Rival payment stocks to Visa. Square, SQ, and PayPal are 2 highly ranked payment processing companies in Ibd's payment processing division. American Express and Discover are 2 other well-known competitors of Visa. PaySign, Pays, is a young company that specializes in healthcare and online staffing. Other names to keep an eye on are PagSeguro Digital, PAGS, and Give. Stoneco, STNE, a Brazilian company backed by Warren Buffett, is another one to keep an eye on. Buffett also has small stakes in Visa and MasterCard stock, as well as a large share in American Express stock. Out of 197 industry groups monitored by IBD, the payment processing sector is ranked No. 111. In this category, Visa stock is ranked 19th, PayPal stock is first, followed by Square stock. What do you think of our video? Let me know in the comment section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.